current oil assets that you own, kind of what are they? What are you noticing? What are you doing with them?
Yeah, so we came into this year over 90% hedged for 2020 and 2021 at oil prices above $50 with very little debt. So we looked at this a little bit dispassionately, and basically for 8 weeks have been telling our investors that crude needed to fall to cash cost of production, which we think are kind of $8 to $15 a barrel in the United States. And that it was a call for the forward curve for 2020, not for the spot, which is important because, the volatility has been in the spot. But when we look at the fourth quarter, we still see that oil prices are just below 30, and that's too high. So, right now what we're doing is looking at curtailing our operated production. So we're 25% curtailed on production in Oklahoma right now. And then working with our partner operators on delaying completions to the extent that we can. I think that, from a financial market standpoint, people like to think that it's pretty straightforward, shut it in, produce it later. But that doesn't address a number of realities that we deal with operationally. One is, geology. So do you have offset producers that are bringing wells online because that could actually produce from your reservoir? So there's a timing component to managing the geology. Another is what is the type of crude that you produce? And we don't produce waxy crude, but there is a fair amount of waxy crude produced in North America. And as one of my producer colleagues said to me, I can't shut in my waxy crude because if I do, I will have a 1 mile candle underground. So I think that, it's very easy to say,
Wow.
oh, these guys should just shut in. But shutting in is much more complicated. And really, you'd rather rely on future CapEx cuts before shutting in. And I think the industry still has, probably 30% of CapEx needs to be cut out of the system this year. Then, shut-ins are just going to be used to manage inventory.